Welcome to Worthy Wealth. Today, we're excited to introduce the Worthy Wealth Senior Living Shares opportunity. I'm David Bacon, Head of Marketing for Worthy Wealth, and I'll begin with an overview of today's webinar before handing it over to our expert product team. Once the presentation concludes, we'll answer some frequently asked questions. The Worthy Wealth team brings decades of experience across finance, securities, and real estate, and we're proud to make high-yield investment opportunities available to everyday investors. One of our featured offerings, Senior Living Shares, is designed to tap into the surging demand for senior housing and targets a compelling 15% annualized return. To help bring these investments to life, we've partnered with experienced third-party operators, and you'll hear from one of them shortly. I'd like to turn this over to Dara, one of Worthy Wealth's advisors and a renowned thought leader in alternative investments, who will provide more information about this and will also share some of the changing market dynamics that make this such an attractive opportunity. Dara?
Thank you, David. And as you indicated, I'm going to focus my part of the presentation on some of the shifting market dynamics that make alternative assets like the new Worthy Wealth Senior Living product a key component to modern portfolios. Now, many investors who are watching this video are likely doing so because they're in search of investments that provide greater portfolio diversification, better risk-adjusted returns. And many of you are also looking for investments that would make a positive impact on society. Well, Worthy Wealth Senior Living was designed to provide all three of those elements: attractive yield, little to no correlation to the broader markets, and an opportunity to improve the lives of others, and in this particular case, our elderly loved ones. So let me start by telling you all that your portfolio is not nearly as diversified as you think it is. Now, sure, there are millions of traditional Wall Street products that are out there for you to buy. But the reality is that they are all just byproducts of the same core listed companies. In fact, more than 80% of the millions of financial products that are sold on Wall Street are just variations of a small sample of public companies. Now, let's start with the fact that, sure, there are 35 million businesses in the US. Out of those 35 million, only 4,300 are publicly traded or listed companies. And what's worse is that that's down from 8,000 in 1996 at its peak. And it's also on a trajectory to be well under 2,000 listed companies within the next 50 years. So what's happening is that public companies are vanishing. And as listed companies, public companies decrease, the average market caps at the same time are increasing. And with both of those happening at the same time, it's making it much harder for investors to diversify, and it's also providing far less upside potential in your portfolio. Now, I will say that the 4,300 listed companies is even quite generous, considering that the vast majority of those publicly traded companies are even barely liquid. So of those 4,300, only about 250 companies actually see daily trading volumes in excess of 5 million shares. So the reality also is that many of the portfolio managers that are engaging with these publicly traded companies and are buying and selling them in the mutual funds that you hold, they really only hold 100 to 120 stocks. That's about it, just 0.7 to 2.8% of all listed stocks. So when you think about diversification, 4,300 is generous. We're talking about literally, 120 stocks. Less than 2% of the funds today out there, mutual funds, hold more than 1,000 unique stocks. And it's even worse when you start talking about index funds, which are really just heavily weighted in just 10 stocks. In fact, just 10 stocks now make up 35% of the S&P 500. And even more astonishing is that 7 of those 10 stocks account for nearly 50% of NASDAQ. So if you look at this chart here, you could see, you might think that you're getting diversification by having a S&P 500 index fund as well as a NASDAQ fund. But the reality is you're really not. And that's really the reason why, even as most retail investors have remained largely confined to traditional markets, the institutional and high net worth investors, they've been really shifting towards alternative assets such as, private credit and private equity, real assets, and a lot of, these alternative in recent years. And if you could see from this chart, you could see especially private credit and real assets, which is really the area that the Worthy Wealth senior living product really falls into, the category falls into. That's really the fastest growing of all the allocations in the alternative space. And here's really the real reason. I mean, it's because of the returns. Since 2005, if you had a diversified portfolio with alternatives, it would have grown 34% more than a traditional 60-40 portfolio. And this really underscores why institutions have been steadily shifting towards this asset class. And this is, basically you see the red line is the traditional 60-40 portfolio, 60% stocks, 40% bonds. The green line is the alternative portfolio where we took 50% stocks, 5% private equity, 5% real assets, and then turned the fixed income side of the portfolio to 20% bonds, 20% private credit. And the other thing to know too is that's really interesting is that even making this shift to alternatives, you're not, most people would say, oh, this is risky. I'm taking on too much risk. But that's not the reality. The reality is the alternative portfolio delivered those higher returns without adding much risk at all, as you can see from this portfolio. From this slide right here. And the best part is that there are a range of tax strategies and wealth strategies that can further reduce the risk of alternative investing while creating powerful tax advantages for today's retail investors. So before we summarize, because we're going to do a little bit of this towards the end, what I first want to do is bring Jeremy on to talk a little bit about senior living and especially highlighting some of the the social impact elements of the investment, and then we'll go in and we'll take a deeper dive into the actual investment itself.
Thanks, Dara. I appreciate it. Nice to have a moment to talk about senior housing. I've been in the industry for 12 years. I've been leading teams through development, operations, lease up, acquisitions, and now investment management. I'm going to go over a couple points that I think are important of why I think that investing in senior housing is a wonderful thing to do right now. I spent some time in management consulting, working with organizations around the world on how to be better, faster, more efficient. And then the time in senior housing plus commercial real estate overall, essentially saying that my background in consulting and senior living gives me a lens that's both strategic, operational, and that perspective is what drives senior housing day to day. The industry operates and how capital is used for senior housing is creating value today, but it's about people. It's about what's going on in these communities, and I'm going to cover why we believe that today senior housing represents an opportunity in investing that stands out above most asset classes. I'm going to review why that is. There's tangible value in senior housing that did not exist 5-10 years ago. So with over a decade in this space, I can tell you I've never seen more opportunities. I've never seen better analytics on how to invest or why to invest in senior housing than right now. So I'm going to walk you through essentially the why. There are 3 points that I'll make, realities that we see shaping the industry of senior housing. Number one, I'm going to cover is the silver tsunami. You might have heard of this term before, but the silver tsunami in demographics perspective is here, and it's accelerating. Number two, there's been a perfect storm when it comes to supply and development. This is creating a market dislocation that I'm going to cover on slide 2 here in a second. And the third point is that senior living as a sector is navigating a post-COVID transformation. We are just at the beginning of that. Investors and operators that can anticipate and align with how this is evolving and how the needs of senior is going to be today and tomorrow is who's going to realize exceptional returns. So this slide that we're on right now, the silver tsunami, let me walk through a little bit of what that means and what's driving this demand. Why this is not speculation, and the fact that when we say that demographic trends are a reality, I'm going to exactly explain why. The 80+ population of seniors today in the US is set to grow by 28% in the years ahead. That's reaching nearly 23 million seniors by 2035. This audience obviously will need a range of senior services and housing, but this is the audience that is going to want to understand how senior housing and integrated healthcare within senior can provide them the needs that they'll have as they age. You might have heard of the fact that 10,000 baby boomers are turning 65 daily. We are today, right now, in the peak 65 era. So what that means is 11,000 people a day are reaching this milestone, and this is going to go through 2027. As seniors enter this age, the health needs that they will have will be significant. At one point, people were coming to us with just hospitality goals, and then through COVID, the care needs have been undeniable. And so 90% of all seniors live with at least one chronic condition. Nearly 80% have 2 or more. So what does that mean? The bottom line is that the demand for senior housing is locked in for decades to come. This isn't a question of if, it's when and how fast. For investors, today is the time. The near future represents a powerful tailwind that, again, only a few, if any, other asset classes can match. When I was the CEO of an operations platform, I had a lot of challenges that are met and still are today. But one of my biggest challenges was recruiting, retention, people, and then also sales. So the competitive landscape of sales was significant. What I believe that is occurring or will occur due to the demographic reality is be part of senior living, and leasing up buildings is always going to be part of senior living. But if I build a community in New Braunfels, Texas, years ago, my biggest challenges was the 5 developers that would build on top of me. The amount of development that was occurring pre-COVID was so significant that was my biggest challenge. We think demographics is going to shift this from a battle of sales to a contest of service delivery and excellence. And in this next slide, I will cover a little bit more of what that means. So the perfect storm is how we phrase that. It relates to available inventory and constraints that the market's going through right now. And so a little bit more about why this occurred as an industry over the past few years, and why the answer of, is new supply keeping up with the pace of demand of demographics? In short, The answer is no. This is where the opportunity really lies, is the fact that private capital and investment has to understand a couple facts of what occurred in the past several years. A few points on this slide, and then I'll discuss, will catch your attention. But construction, in terms of starts, new development, they're at a 10-year low. New builds represent just 4 to 5% of all current inventory. This is far below where it was pre-COVID. So less starts, less builds, less development on top of each community. The industry, however, needs 800,000 to 1 million new units by 2030. So that's significant. 1 million more units needed by 2030 just to keep up with the demographic changes. That's 96,000+ units a year. We are nowhere near close to that pace. That is a critical housing issue. And the question is, why is that? Why is this occurring? Developers, and I am one of them, remain and still are facing a brutal financing environment and a challenge to actually build. Interest rates are still up, lending is tight, construction costs remain a challenge, they remain high. So the economics of a new build are just very difficult. They're broken right now. So unless you have a creative way in terms of how you're evaluating a new start or a new community, or you're just making up cap rates, it's really hard to justify. And what that means for investment is that new developments are going to continue to suffer, and unit supply is going to continue to suffer. That's why we call that a perfect storm. So limited supply, capital constraints, pent up demand. This is why we think this is a window of a perfect storm that exists to take assets in the market today, add value to them, reposition them, drive excellence through operations and through teams and your delivery of care. That's what the perfect storm will offer people. Let me go back to 13. So redefining senior living. Lastly, this is my final slide. This term I used in 2015 when I was the CEO. It's an idea and a concept that's had some setbacks during COVID, but it definitely remains true, which is how will senior living be redefined in the days ahead? This is not just a supply and housing challenge. This is certainly an operational challenge. What does your community and the teams that operate within them, what do seniors need and want? Today, a senior living community in the US typically is about 20 years old. So the vintage of some of these buildings are not going to fit with the expectations today or in the future for seniors. What they want from a wellness perspective, lifestyle, comfort, care, how staffing does their job. This is all evolving, and your building has to match that. Seniors are arriving to us older with higher acuity, meaning communities are going to have to deliver more than just the housing and be integrated healthcare hubs. This is nothing new, but to be good and have the community designed for this purpose, for primary care, telehealth, rehab, chronic condition management, this is all going to be very important. Next point would be technology. Seniors are going to arrive into senior housing more connected than ever. So technology is going to not only be important, but will evolve rapidly in the years ahead. Communities right now must meet their digital expectations of seniors with kind of a forward-thinking IT infrastructure and strategy that supports smart living for families and for seniors. So to be able to do telehealth, to have safety sensors for those that might be in dementia care, smart lighting, voice assistants, these are all things that we've talked about for a while, but we do know that there will be a modern senior and a modern senior living that's quickly going to approach as baby boomers enter this market. Last point I'll make in terms of what is redefining senior living is dementia care is mission critical. Cognitive decline, dementia care is one of the most significant unmet needs. The winners who will deliver modern approaches to senior housing will have to combine clinical excellence, training, and purpose-built memory care environments to be able to keep up with just being the best at dementia care. That is what it requires, is a daily effort, because it's very hard. Finally, the underlining point or force I'll make to wrap up this slide is that to make all this work, and what separates good investment from a bad investment as it relates to senior housing, is the people. It's a very operational business. To be in senior living is to be in the business of culture. It's to be in the business of training, taking care of those who are taking care of our loved ones, basically. So retention, how you treat staff. Not all operators are created equally, and very few have had to evolve over the past several decades. So this is going to be very important, and selecting operators and organizations is one of the most critical decisions that we make when we're investing in senior housing, and that's going to continue. As a former CEO of senior living, nothing's easy. It's in my experience, there's typically a wrong way and there's a right way to take care of our seniors. What we do know is that together with an operating partner who is a third party, your reward with the team is delivering service for these seniors, and that will be critical in how we select investments. So to summarize this, you can't just own senior housing. You must understand it. You must understand who's operating it and how to enhance it. And that's exactly where we specialize. So in summary, why now? Why invest? I'll just make a couple more points. The demand is in motion. The demographic certainty is real. Number two, the supply and demand imbalance has never been more significant and will continue to be imbalanced. Number three, senior living is evolving, creating room for outsized returns. Operators and investors who adjust and execute will be the ones that are at the top of the list in terms of who's finding results and value. I'll close with four more summary points that when we think about senior housing investments that are going to be important. You need to focus on purpose-driven acquisitions. You have to understand the repositioning of these assets and how to drive value through creating a differentiator. You want to have best-in-class operations and care staff with training. Again, focus on dementia care is important. We do have to leverage technology and data to drive outcomes. And you want to lead when it comes to how you're taking care of both neighborhoods of assisted living, which is care-based, and dementia care with excellence. So David, I'm going to throw it back to you. That's the end of my slides.
All right, let's move into some Q&A. And I'll start with, do I have to be an accredited investor to invest in senior living shares?
I'll take that one. The answer is no, you don't, which is great. This is what is one of the reasons why this investment is so great, is because, that's what Worthy does, right? Worthy has a history of utilizing certain exemptions to basically qualify these type of investments with the SEC, the regulators, so that they could bring this type of investment opportunity to the masses. So the beauty of this is, no, you don't have to be an accredited investor. And I saw there was a question here about minimums, and in this case, very small minimums. For a minimum of $100, you could participate in this investment.
Thanks, Tara. And just to build off of that, is there a maximum investment size?
So maximum investment is, yes, there is a $50,000 maximum investment for this particular investment. And that's because we really do want to, give an ample opportunity for the masses to participate. We don't want this to be just simply an institutional product. It's designed for retail investors. It's designed to give retail investors, an opportunity to participate in the same types of investment opportunities that the institutional and high net worth investors have been enjoying for years now.
Thanks, Tara. Another one that came in that I think is very interesting. Does Worthy Wealth operate these communities, or how do you manage operations?
Yeah, I'll take that one, David. And the short answer is no. Worthy Wealth would be this investment would be managed by a third-party operator, and there's a lot of reasons why third-party operations is the dominant kind of structure for senior housing. It takes each state from a regulatory perspective, each neighborhood, if you will, from assisted living, dementia care, and independent living, all have different training requirements that are state specific. You really want to choose an operator and choose a third-party group on a variety of criteria. A couple that come to mind, if a community is in the Pacific Northwest and the operator is based in the Southeast, that might not be a good match. And if the operator just merged with another operator and they have 300 communities, that might not be something that you would select when you have a small portfolio that needs to be agile. So yeah, third-party operations would be the answer to that question, and there's a lot of ways that an operator is selected based on deal by deal.
I'm just going to put up the slide too that shows actually a summary of the investment. So I know there are some questions about that as well. Here's a summary of all the highlights of the investment that you could take a look at here. It is structured as a preferred equity with a target yield of 15%. It's a target term for 5 years, so you should expect to hold on to the investment for about a 5-year period. The first dividend will be paid on around May 2026. The subsequent years, the dividends will be paid quarterly. So for the first 3 years, you're getting, aside from the first year, the second year, third year, you're getting quarterly dividend with an annual NAPY of 5%. And then 7% on years 4 and 5, you should expect, and those will be paid quarterly. So that, and then, that's just on the returns that you're getting, as far as dividends are concerned, but you're also getting a piece of the profits, which is another beautiful thing about this investment. So your percentage of the profits will be based on the number of shares that you hold. So when sales of some of these properties occur, that's going to be, you're going to be getting that profit into your account too. So that's where the target yield of 15% comes in. So I hope that kind of gives a little bit more of a framework on the actual investment opportunity. I just want to say, Jeremy, David, I love that Worthy is doing this. As someone who, I'll get emotional, but I went through this with my dad, to have the opportunity do something to provide, an investment opportunity for retail investors, and give them the same returns that institutional investors are always, have been enjoying. That always resonates with me. I'm always happy to do that. But to also have this element where we could really be doing something to improve the lives of our parents, our grandparents, that to me means so much. So thank you for doing that.
Yeah, just to follow up on that, it reminded me that it is, I believe, impact investing. I do believe that it's different than other asset classes, but it also, because of that, there's a high barrier of entry, and you really do have to have experts on your side. So, those looking to invest, whether it's a year from now, 2 years from now, or 3, it's going to be quite obvious to everything we've been saying of why, and we're really ahead of that right now. But you're also, it's a barrier of entry to get into this industry, because you can't just be someone that knows how to build multifamily, self-storage, or something like that. You really have to know what you just said, Dara, the real things that occur in these communities to do right in terms of investing and operations. So yeah, it is quite a niche market that's important.
Yeah, I appreciate that, Dara and Jeremy. Jeremy, this one seems to be one that you could take. What type of senior living will these communities consist of? Assisted living, for example?
Yeah, happy to. So the investments would consist of private pay senior housing communities. And these communities, in terms of when you talk about the life cycle or a continuum of care, in terms of types of communities, the spectrum that we would say in the industry is that primarily the investments would be assisted living, which means you do need some care support, you need support in daily activities. And then dementia care, which we also call memory care, that's primarily what these assets would be. So a typical 100 unit community would have, mine always had 65 units, and if you used 100 of assisted living and 35 units of a secured and safe dementia care neighborhood. There's also independent living, which is less regulated. It doesn't have the scrutiny of assisted living and dementia care, but it is a good price point. It's a good entry into senior living that you then might have to shortly thereafter need assisted living. But that's a popular and good product and service that we would be looking at as well. And then I would say on the peripheral, the 55 plus, which is highly of choice. It is popular. It's a great community. It's getting better and better. But you see people in a 55 plus that are actually 65 to 70. You see people in independent living that are, almost 80, and you see people in assisted living that are 85 plus. That's all, was different 10 years ago. The one product that we would not invest in, it's very difficult and it's needed across markets, but skilled nursing is not what this investment platform would do. It would be essentially 55 plus independent living, assisted living, and dementia care.
Thanks, Jeremy. A question came in, can I reinvest my dividends?
Yes, you can reinvest your dividends, but for right now, as of now, you can't do that automatically, like by pushing a button. But what you can do when those dividends come in, then you could go and then just purchase some more senior living shares. So there's ability to do that now, and I think at some point, and probably the not too distant future, there will be an opportunity to just do that on automatic.
Another one that came in that's related. When should I expect the return of my principal?
So, well, I think with this investment, you're looking at a 5-year hold. So I would expect, anyone that's looking at this for an investment, great for like a retirement portfolio. I would expect that this would be something you would want to hold for a 5-year period.
Thanks, Tara. Can I hold senior housing bonds in my retirement account?
And I love that question because the beauty is, yes, you can. We are working with custodians as of now that will enable you to do that seamlessly. So whether you're someone who is looking to start a retirement account and looking to put this product in that invest in this with use retirement dollars in a new account, feel free to reach out to me. I could help you with that. If you are looking to do that through if you already have an existing retirement account and you want to use some of that money, or from that, we do that in what's called a self-directed IRA rollover. We could facilitate that whole process for you to make that as seamless as possible.
Appreciate it, Dara. And Jeremy, you may have touched on this a little bit, but one of the last questions we had come through is, what is the typical age and health of residents who are in senior living?
Well, back to my earlier answer, that would be, defined more accurately in terms of what neighborhood or what community we're talking about. So if you go back to my 55 plus independent living, assisted living, dementia care, a typical resident in a assisted living dementia care community, so these two neighborhoods under one roof, would be the 85 age demographic. And that's gotten a little bit because of these other products and because of other healthcare solutions and like home health. That's risen a little bit. And then, as I mentioned in my presentation, the fact that not only is the age creeping up a little bit, but they're also coming to these communities with real issues, chronic conditions that need support. But yeah, the answer probably would be, someone in your 80s is who's coming to us. And if it would be certainly a little bit younger if we spoke about independent living and 55 plus. I'll also say that those might have experience with this as well with loved ones, but a full campus is also very common. It's attractive. It's something that certainly will be in the buy box of what we're looking at, but a campus essentially means that, and it's related to this age question, you could come into a community that, let's just say, has 220 units, 120 units of those are apartments that are independent living, and then 100 units are the ALMC, the assisted living dementia care units. And that essentially says you could come in at 70, 75, or 80. You're in independent living, or maybe your spouse needs something that you don't, and you're in one building and you essentially age in place. So while you're in independent living at a certain age, then you might need other services. You don't have to do a very disruptive move across town into another community. You then move into the assisted living, and then perhaps, if needed, into dementia care.
Well, thank you, Dara and Jeremy. I think we had a great discussion today. For those watching the webinar, if you scan the QR code or if you click on the link in the description, you'll come to our invest page. Very, very simple. Click on the purchase shares button underneath Worthy Wealth Senior Living Shares. Create an account, link a funding source, and then you can purchase Worthy Wealth Senior Living Shares fairly easily. If you are an existing Worthy Financial Bonds customer, you can simply click on the login right at the top of the screen there and use your existing credentials to log in order to purchase Worthy Wealth Senior Living Shares. and we look forward to having you as part of the Worthy Wealth family.